And the Nigerian bond market witnessed a bearish week capped by sell-offs of select maturities. Traders at UBA expect the sentiment to persist in the coming week as September 2023 bond auction holds on Monday. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me for a market discussion. Chuka, thank you so much for joining us today.
Thank you, sir.
I'll bring us up to speed. Let's start with the money market. According to your note, there was an absence of major inflows this week, but let's have a weekly view of how that played out.
Okay, yeah, thank you. The money market opened the week with system liquidity around over 350 billion. By this morning, the system was in negative of about 70 billion. This is as a result of major outflows during the week, especially the NTB auction, which was on Wednesday, and then the settlement was yesterday. We saw well over 214 billion was offered and sold, and then so those huge inflows actually made the system quite tight.
Right, let's move on to the bond market. Also, some notable sell-offs on some select maturities.
Yeah, on the bond side, we've seen a lot of bearish sentiment, especially on the longer end of the curve, which is the 2053. This is because this bond will be on auction next week, Monday, where we have well over 350 billion will be offered. And so a lot of people carrying this bond from the previous auction results, which came out, the longer end came out around 15.85, only makes sense to sell off and then, go into the auction hoping that the yield will be higher.
Or what about the treasuries market? What can you tell us from the rates that we're seeing and, of course, trading at the secondary market?
Yeah, on the T-bills market, like I said earlier, we saw a drop in yield, especially the 1 year, a drop from 13.79 at the auction, drop from 13.79 the previous auction to 12.55. That's about 142 basis point drop, and that 1 year is currently trading around upper 10 levels, 11%, 11.1%. So that has actually, attracted a lot of, activity, especially on especially at that particular 1 year, which obviously is more attract more of investors in terms of the level of the yield.
Well, I know that liquidity plays a key role, but what is your forecast for a short-term movement of this? A 1 year bill at 12.5%. Do you foresee it falling lower or strengthening?
Yeah, it's currently trading around 120, 150 basis points from where it came out at. So liquidity, like you rightly mentioned, is key. We saw a robust system liquidity, and mind you, the subscription was well over 813 billion, and so and then of course 214 billion was offered and sold. So you have a deficit of well over 580 billion out there looking for this short, this particular 1 year. And obviously the yield will drop because those who didn't buy who didn't win at the auction, we obviously come into the secondary market to fill in their, fill in the gap, and that's why we will continue to see the yield drop, irrespective of what the liquidity situation is.
Right. Okay. Let's quickly take a look at the FX markets. Where did the naira trade against the dollar today? And I was speaking to a trader earlier about that 10 billion FX inflow that was meant to come into the market. We have seen actually rates drop to from the 774 levels. We've seen it in the last couple of weeks. But where is the naira today?
Yeah, Naira actually appreciated. It's currently trading around 735 levels from 744, like you rightly mentioned. The news about the CBN, trying to meet all the obligation has actually also brought a little bit of confidence in the system, and I guess that is why Naira is reacted the way it has reacted. And so we hope that this promise will be kept, and we hope that once those obligations are met, we see further strengthening in Naira.
It's interesting how, I mean, the money hasn't come in yet, and we've seen this significant drop. Waiting to see what actually happens when the money does hit the market. Let's talk about your forecast for trading in the new week. I know, like we've mentioned a couple of times, the September bond auction on Monday. Talk to us about how that could drive or impact on rates movement for the new week.
Yeah, so the new week we start with the bond auction like we mentioned earlier. We will see 60 billion will be on offer across 4 maturities. Like I said earlier, the longer end, which is 2053, came out at 15.3, 85 the last auction. So we expect to see it print slightly higher, maybe around 16% levels.
Okay.
This is.
Go ahead, finish your thought, please.
Yeah, so this is because the government obviously is looking to borrow more, and then of course government will obviously like to make the yield more attractive for investors to to key in, and that's where we see that's probably what will drive the activity going into the week, and hopefully the system will continue to remain robust. If the system remains robust in terms of liquidity, then we'll see more bullish sentiment. Otherwise, we'll see a bearish sentiment, people selling off in order to create liquidity.
All right, Chuka, thank you so much for talking to us today. We appreciate your time. And of course, I have a great weekend. Chuka Nwachukwu, head of ALM and balance sheet management at UBA.